This is a physical representation of the one resource you can never earn back: your time. Money is simply a tool to reclaim it. You could secure the highest paying job in your field, but a massive salary does not automatically equal wealth. This quadrant chart measures financial literacy on the bottom against income on the side to show exactly why high earners still go broke. Compare that to the bottom right. Proper mechanics allow someone earning a modest hourly wage to slowly compound that money into substantial net worth. Without management skills, massive paychecks are wasted on immediate lifestyle upgrades. This traps you in a high-stress cycle where you earn well but retain nothing. The modern market is flooded with conflicting tools: robo-advisors, real estate leverage, premium credit cards. But applying the right tool at the wrong life stage can wreck your finances. Financial success requires matching the exact right vehicle to your current bandwidth, discipline, and life stage. Before building long-term wealth, you must control how you physically execute your daily spending. This table compares the structural trade-offs behind everyday payment methods, evaluating their core benefits against their hidden costs. Credit cards provide immediate reward points and actively build your credit score, which you need for future large purchases like a mortgage. The strict trade-off is that failing to clear your balance entirely every month triggers a 20% interest trap, mathematically wiping out any cashback value you gained. Prepaid reloadable cards enforce rigid spending limits. Because you can only spend what you load, they act as a hard behavioral guardrail if you struggle with budgeting. While cash and prepaid cards completely eliminate your risk of debt, they zero out your ability to build a credit history. The optimal payment method has nothing to do with chasing maximum perks. It is dictated entirely by your level of personal discipline. Once you control your spending, you generate surplus cash. Where you park that money depends on when you plan to spend it. This decision flowchart filters financial strategy by time horizon, splitting capital into short-term cash and long-term deployment. Cash needed for immediate emergencies, typically 3 to 6 months of living expenses, belongs in a high-interest savings account for ultimate safety and liquidity. But holding cash carries a hidden penalty. With a baseline inflation rate around 2%, a sudden market correction could force you to withdraw rent money at a massive loss. Saving is a defensive shield to preserve your life today. Investing is the offensive engine required to afford your life tomorrow. To deploy that 5-year capital, you have to select a specific growth vehicle. This chart maps out investment tools by measuring the active time and effort they require against their potential yield. In the low-effort zone, robo-advisors offer total automation. They balance your portfolio and reinvest dividends without you having to lift a finger. Moving up the curve, self-directed stock investing allows you to maximize returns and collect quarterly dividend payouts without losing percentages to management fees. Physical real estate sits at maximum effort and maximum yield. You accelerate wealth heavily here by using the bank's money to buy the asset, then paying down the debt through rental income. The trade-off for automation is sacrificing control over your individual assets and paying a perpetual management fee. That control demands immense upfront research hours. It requires the psychological discipline to hold your positions and not panic sell during a crash. There is no such thing as free passive income. Every wealth-building strategy extracts a strict toll paid in your time, your cash, or your control. This scorecard matrix consolidates these tools into actionable blueprints, matching specific strategies to 3 distinct lifestyles. If you are an overwhelmed beginner struggling with debt, utilize a prepaid budgeting app to block overspending and automate a small transfer to a basic emergency fund every payday. You must completely avoid credit cards and stock picking until you lock in behavioral stability. For the time-poor professional, someone with high income but zero bandwidth, utilize full balance reward cards and funnel your surplus cash into tax-advantaged robo-advisors. Ignore complex market strategies. Let algorithms compound your wealth while you focus on career growth. Finally, the optimizer has capital and time. Automate basic expenses, allowing you to focus on real estate leverage or DIY dividend screening. The optimal financial strategy isn't the one with the highest theoretical return. It's the one you can consistently execute without burning out. The final psychological hurdle preventing most beginners from acting is the paralyzing fear of making the wrong financial choice. This graph illustrates the mechanics of delay. A minor early mistake, like paying a small robo-advisor fee, is nothing compared to the massive, invisible loss of compound interest that forms when you wait a decade to invest. Waiting to learn the flawless financial strategy will cost you significantly more in lost returns than taking a flawed first step today. Identify your archetype, set up one automated financial guardrail today, and let time execute the heavy lifting. Money is simply the world's most effective tool for buying back the freedom to design your own life.